Hello and welcome to NDTV and BQ Prime's special segment, Let's Talk Business. I'm Priyanshi Sharma, and in this segment, we'll get you the top news stories from the world of markets, business and finance. Let's first start with how the markets performed today. Well, Indian stock benchmarks closed lower today for the third straight day, led by declines in realty, services, power, oil and gas stocks. Sensex fell 128 points to close at 61,431. While Nifty slipped below the 18,200 mark. My colleague Hiral Dadia joins us for the latest on this. And Hiral, take us through with all the market action that happened today.
So markets have actually ended lower in today's session and continued the losing streak for third consecutive day. Clearly the volatility was high as it was weekly expiry, and if you see in the first half of the trading session we didn't see a major sell-off. There was positivity, but there was a slow and steady sell-off that started to build in. Clearly Nifty ended below the 18,200 levels in trade, and overall if you see it was the financials which outperformed, with Bank Nifty ending in the green. Real estate, PSU banks as well as the pharma sector was a drag in today's session. Along with that, FMCG was also a drag, with ITC, Titan and Britannia which slipped in trade in the last hour, and we saw cuts of little over 1%. From a contribution perspective, it was mainly SBI and ITC that did put pressure on Nifty as well as the Sensex. So clearly, if you go to see the fag end selling that we saw in names like ITC, SBI, dragged the Sensex by nearly 130 points, whereas Nifty did also crack below the 18,150 levels. Overall, if you see in terms of the gainers, Bajaj Finance, Bharti Airtel, Kotak Mahindra Bank, HCL, as well as ICICI Bank, these were few of the top gainers on Nifty 50. Whereas on the losing end, you had names like Divis Laboratories, which was the top loser, followed by Adani Ports, ITC, SBI, as well as M&M. A lot of stock-specific action is what we saw in today's session. So if you see SBI, that counter saw profit booking in trade after posting a better than expected fourth quarter, and the stock fell over 2%. ITC fell 3% from highs after posting an inline quarter. GAIL almost was down around 3%, and this was mainly on the back of lower than expected Q4 numbers. If you see in terms of the broader names as well, if you see Bharti Airtel, that continued to gain momentum, and that was mainly on the back of a healthy Q1 that was posted out. Ramco Cements rose over 4% from lows, and this was again on the back of numbers. Honeywell Automation, a good 8 to 9%. The stock was above the 40,000 mark already in trade today. Jindal Stainless, Whirlpool also surged post Q4 numbers. And from the losing end, you had stocks like MTAR Technologies, REC, MM Forgings, Thermax, JK Tyre, Realtel. All of these counters slipped after posting Q4 numbers, but not that the numbers were bad. Some of the counters, a strong set of numbers, but did see profit booking on the back of the run-up that they had seen towards the earnings. Overall, if you see in terms of the breadth as well, that was pretty much in favor of the declines, and the advanced decline ratio was in that 1:1 kind of a range. So overall, if you see, yes, there is profit booking that is coming in terms of where markets are concerned, but that's mainly on the back of the run-up. However, the key monitorables, if you see from a technical perspective as well, from the WIX to the PCR, the underlying tone is absolutely positive, and that's what analysts are expecting, and they have been garbing on the strategy of buy on dips from here on. That's all that we have.
Thanks very much, Hiral, for that update. And moving on, India's largest lender, State Bank of India's fourth quarter net profit surged 83%, beating the estimates by analysts. Now, the net interest income, or the core income, rose by 29.5% from a year ago to 40,393 crore rupees. The gross non-performing asset ratio fell 36 basis points to 2.78%. The asset quality, on the other hand, for the quarter improved, with a gross non-performing asset ratio falling 36 basis points quarter on quarter to 2.78%. The net NPA ratio too dropped 10 basis points sequentially to 0.67%. Let's listen in to what the chairman of SBI, Dinesh Khara, has to say on the results.
As far as the write-off is concerned, there is a process which we follow. Once we have 100% provided for, that is the point of time when we take them to OCA. And once the OCAs are subject to review, almost about after 8 quarters, we go for the write-off. So it's not a strategy, it's a process which we follow. So that is something which I would like to highlight. So I think because 100% provided for, we do make efforts, and if at all we recover, even if we write off, the right to recover does not get extinguished. Let me just clarify on that. So I think this is a process, and this is from the balance sheet perspective what we do.
You said that there are about 1.75
Actually, you are talking about the infra.
Yeah, that's right. So I'm just talking about where are these assets showing up? Is it still a very government-led approach? Are there a lot of private players also in there?
No, it is actually a combination of both. As far as renewable power is concerned, many of the private sector players are also there. When it comes to EVs, it is all private sector. When it comes to batteries, it is all private sector. Only in the renewable sector there would be some participation from the government. Otherwise, the rest of the initiatives are all in the private sector.
And moving on, FMCG conglomerate ITC's consolidated net profit jumped 23% on a year-on-year basis in the March quarter. The same stood at 5,175 crore rupees versus the profit of 4,196 crore rupees a year ago. The company's revenue from operations during the March quarter surged 7%, taking it to 19,058 crore rupees against 17,754 crore rupees last year. The board has also recommended a final dividend of 6.75 rupees and a special dividend of 2.75 rupees for the financial year 2023. And now moving on to the other big story, Swiggy's food delivery business has turned profitable after 9 years since its inception. This is after factoring in all corporate costs, excluding employee stock option costs as well. My colleague Rishabh Bhatnagar joins us for more details on this. And Rishabh, take us through those numbers.
Well, yes, just one day before Zomato is set to announce its Q4 results, Swiggy CEO has come out and announced that as of March this year, the company has turned profitable in the core segment of its business, which is food delivery. It has claimed that it is one of the very few food delivery companies in the world to have achieved profitability in less than 9 years since inception. Now, it's also important to note that Swiggy has said it has turned profitable excluding ESOP costs. ESOPs are employee stock options, which are share-based payment methods that companies, and nowadays especially startups, have started using as a tool for compensating employees. Coming back to Swiggy's performance, this move towards profitability is also made possible after it cut costs, fired 380 employees in January, and also shut its meat marketplace. It's also important to realize that at an overall company level, Swiggy is not profitable. In its Instamart business, which is its quick commerce arm, it is still losing money. On that topic, Swiggy's CEO said 3 things. 1, he said that the company has made disproportionate investments in Instamart. 2, that the peak of funneling money into that business is now over. And 3, that the Instamart business is now strongly progressing towards profitability. Coming to Swiggy's main rival now, in its Q3 earnings, Zomato had said that it is nearing adjusted EBITDA level break-even in its food delivery business. Like Swiggy, Zomato is also losing money in its quick commerce arm, which is Blinkit. So yes, this announcement gives Swiggy much needed relief after its valuation was slashed by Invesco and Baron Capital. And also Swiggy has sort of trumped Zomato in the very key metric of profitability in the core business just one day before Zomato's earnings.
And moving on, Amazon Web Services is bullish on India. The company will invest 1.05 lakh crore rupees in cloud infrastructure in India by 2030. AWS is looking to meet the growing customer demand for cloud services in the country, and the investment will support over 1.31 lakh full-time jobs every year. The firm has already invested nearly 31,000 crore rupees in India between 2016 and 2022. The Minister of State for Electronics and IT, Rajiv Chandrasekhar, welcomed the move and said that that this investment will catalyze India's digital economy. The centre too has been working on a cloud and data centre policy to catalyze growth of India Cloud, according to the minister. And that's all we have for you in this segment of Let's Talk Business. Tune in at 5:30 p.m. every weekday to get an update on the top business stories. For now, a short break, more news on the other side.